Brace yourself for a volatile 2025. Over the past 2 years, we've had a great performance for US stock market. We've had some great gains in 2023, 2024, and a lot of people expect the trend to continue thanks to AI, thanks to earnings. A lot of people think that 2025 will be great for stocks, that we will have a performance of 20% for the S&P 500 and life is good. But I'm telling you, nobody knows if this will happen. So we don't know what the performance will be. And it's better to be prepared if a risk happens, if a crash happens. It's better to have a portfolio that is prepared. In this video, I want to show you some tips that in case we have a crash, in case we have a drawdown, you are prepared. I want to highlight some risks that may arise in 2025, some shocks, because what I see on the news and what you likely see on YouTube videos or on the news, CNBC, is that people are bullish because of Nvidia, AI, Trump, the US, earnings. You have a lot of reasons to be bullish, but you don't have a lot of reasons to be bearish. So in this video, you will have a list of risks, and the goal is to help you prepare in case we have a drawdown, because that's the life of the markets. In 2022, we had a drawdown of 20%, so it can happen. Nobody knows when, but it will happen in the future. My name is Christophe Nour. I've been investing in the stock market for almost a decade and have achieved a performance of 25% per year thanks to preparation, good stock picking, long-term thinking. I like the way it is. So let me start with the first risk. Over the past 2 years, 2023, 2024, we've seen the development of AI, ChatGPT, Nvidia. A lot of stuff is going on basically, and you see the development of AI that is not stopping. You see the growth accelerating. You see a lot of disruption. You see a lot of AI agents that are coming. You see that you can replace a lot of the workforce, get efficiencies thanks to AI. And if you look at the Magnificent Seven, Microsoft, Google, Apple, Meta, etc., they plan to increase their capex massively. They plan to invest in data centers massively. They plan to invest in AI massively. You have a quote from Mark Zuckerberg that says that the biggest risk as a CEO of this big company, the biggest risk is to not take a risk. You want to be prepared and not miss the train, or you will end up like Intel. So a lot of companies in 2025 will increase their capex, because they think the AI trend will be here for the coming decade, because they are prepared basically. And are you prepared? I'm asking you this question. But the AI trend, nobody knows if this will be profitable. It's sure now we have proof that this new AI trend, technological advancement, will boost revenue for companies. But what about the earnings? Nobody knows. You have a lot more competitors in the space. You have a lot of disruptions, and you have a lot of companies that are not profitable in this AI race. Even ChatGPT, with the CEO Sam Altman saying that they are not profitable with ChatGPT. It's a great product, they have great revenue, but the costs associated with the growth are huge, so they are not profitable. So maybe you are aware of this. ChatGPT introduced a new plan, $200 per month, to have a ChatGPT Pro, like a better format, a better ChatGPT. $200 per month is not even profitable for them because of high demand, a lot of prompts, a lot of electricity usage, a lot of data center usage. $200 is not enough because of high demand. So what you see on the news is great. AI is boom. That's also what I believe. AI is just phenomenal. It will boost revenue, get efficiencies. But for a lot of companies, it's not profitable, including OpenAI, ChatGPT. It's not profitable. So if it's not profitable for ChatGPT, it may not be profitable for other players. So be careful with your portfolio. If you are investing in AI, you have AI related names, please be careful. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. And I'm expecting some choppiness when it comes to AI trend, AI growth for 2025. So one first risk out of this video is the implementation of AI. Now we don't have promises. We have to execute on the AI trend. So we will see the results. If companies are profitable or not, if companies screw up or not, if companies make a lot of mistakes, acquisitions, some M&A development, M&A deployment, international businesses, we will see. And that could lead to a risk. If growth decelerates for AI, that will shock a lot of investors. And this is not priced in. In the markets right now, if you look at the Nasdaq companies, a lot of AI companies are expensive in the market. The stocks are expensive. A lot of growth is priced in. In case growth disappoints, the stocks will collapse. So be prepared for this. Be sure to invest in profitable businesses. That should be how to prepare for this risk. The second risk that is likely to increase the volatility in the market is Trump. Trump, as a new president, is likely to tweet a lot. He will post, whether on Twitter, X, Social Truth, anything, any social media. You remember, I know the age of my audience, so I'm sure you remember the Trump between 2016 and 2020. The markets saw a lot of volatility, basically. You have a lot of tweets, some threats, North Korea or Russia or China or any country in the world, and you will have the markets that will react accordingly. People will panic. You will have the fear and greed index of the S&P 500 that will change a lot, and you will have some days where maybe President Trump will announce some new tariffs for China, and the market will drop accordingly. This is what happened in 2018. Go check the S&P 500, and you have this for April 2018, and you have this for December. So you have major shocks, and in case we have a strong economy, it can still be affecting the S&P 500 because of the tweets. So that will add more volatility, and I expect way more volatility when Trump is president. So for the next 4 years, you will have volatility. I welcome volatility. I like it actually, because people will panic, and I will be opportunistically buying some good companies at a cheap price. So I like when stocks move a lot. So I don't see this as a net negative. It will add more risk, more uncertainties. You have to be sure of your picks and be prepared. Basically, now you know it. You can't tell that you weren't aware of this. You will have a lot of tweets. You will have a lot of threads. You will have a lot of volatility in the market. The third risk is the Chinese rebound. It will add more volatility. Now, as you may know, the Chinese economy is in a bad period, has been in a bad period for 4 years now. The Chinese stocks have been crushed. Nobody knows if they will rebound in 2025 or 2026 or 2027. We don't know. And it's very likely that the US will continue to be the leader in the world, and they will maybe slow China down in their recovery. If the US government can help US companies instead of saving the Chinese companies, they will do it. So I'm not sure about the rebound of China, about the timeline. If China rebounds, you will have a lot of global consumption, global demand for the world, for raw materials. China will have to buy more oil, more steel. It will impact all the global markets of commodities, for example, but also the Chinese demand. You will have some more power for Tencent and TikTok, for example, or for Alibaba, JD.com. It will disrupt a lot of industries. If China rebounds, it will disrupt the world. I'm thinking of commodities first because they import a lot. We will see. We will see what will happen. So please check the news in 2025. Follow the Chinese news. Check the consumption. I follow some people on Twitter. You can follow them too. They give you data about inflation over there, consumption, how it's working basically. And If China rebounds, it will certainly add more uncertainty for US companies. If China rebounds, you can guess that a lot of hedge funds will sell their expensive stocks in the US to buy cheap names in China. That will lead to more outflows from the US and more inflows in China. We will see. That will be a big change. Now, as I'm speaking, January 2025, you have a lot of outflows from China. People don't want to invest in China. But it will revert back. Nobody knows when, maybe in 2025. And that will definitely add more volatility because inflows and outflows impact market. The next risk is that now we have a new Canadian government. With Justin Trudeau resigning, nobody knows what will happen. Maybe some new regulation, some new tax rate. Nobody knows. I'm not Canadian. I don't really have an opinion on this one. If you are Canadian, you can maybe add a comment on the comment section below. But that may impact North America as a whole because of the new government. Okay, next risk obviously are the conflicts in the world. You have some geopolitical conflicts all around the world, and nobody knows if they will resolve in 2025 or not, or it will get worse. Nobody knows. I just spoke before about China. Maybe they will get into a new conflict. Nobody knows. And because nobody knows, that's a risk. Because that's not priced in the market right now. People expect euphoria, S&P 500 going up, Nasdaq going up, AI. If we have conflicts and some companies are disrupted, you may lose all your investment. So just be prepared. If you invest in good companies, be sure that they are not invested in conflict areas in the world. But that's definitely something that can happen in the market. We've seen this in 2022 with Ukraine and Russia. We've seen that it added some fear in the market and contributed to the drawdown of the market. Okay, let's continue. New risk. You have an inflation rebound. Yep, you have some elements now showing that inflation is stickier than expected. Inflation is slowly rebounding. So we will see in 2025 if this is a small blip and it will come back down again and then inflation is tamed. Or maybe we will see in 2025 if inflation rebounds from 3% right now to 4 or 5%. And I'm telling you, if inflation goes back to 4 or 5%, it's unlikely that the Fed will cut interest rates. And that is not priced in the market right now. People are still expecting some cuts from the Fed. And inflation comes back up, you can guess that they will not cut rates, they will hike rates. And that will crush a lot of companies, a lot of startups, a lot of small caps, nano caps, mid caps. They will suffer greatly. And if, by the way, you have a shock from the interest rates, but you also have a shock from the inflation. Some companies are not hedged against inflation. Some companies have a lot of costs. And if inflation is picking up, your costs will increase massively and your profitability will decrease. So some companies, asset-heavy companies, are in a bad shape. If we have inflation again. Just so you know, be prepared. Don't invest in massively capital intensive businesses because that's a risk for 2025. That's a risk. Don't pay a high multiple on this one. Don't pay a high price. So yeah, inflation rebound, interest rates, and the US real estate. Now the US real estate is a strange position right now, and seems like people don't expect anything from the US real estate. But we've seen in the past the effect of price decreasing for houses. We'll monitor the real estate, not bubble, but real estate high prices in the US. I will monitor it. You have mortgage rates that are pretty high right now, and you have very few people buying a house because that's a high mortgage rate. So we will see if something explodes in this industry. That would be the key risks I would highlight for 2025. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address, just click the first link in the description and I'll see you on the other side.